But also staying with interest rates, car dealerships were pining their hopes on a rate cut to help boost poor numbers. The industry has seen some headwinds in the past 3 years with low new vehicle sales. Business editor Xolani Mbanjwa spoke to the National Automobile Dealers Association Deputy Chairperson and Avari car CEO Thembinkosi Pantsi.
It means that we're heading the right direction as a country in terms of the economy. And I think the last couple of years post-COVID have really been tough. From a fuel prices point of view, rand-dollar exchange, to selling of new vehicles and the numbers that we've seen dropping. And I think that the interest rate cut will add a much-needed boost into the economy, but most importantly for our sector, it will mean that the vehicle sales should, and we hope that they will start to see some increase. If you look at the month of August, the sector was down by almost like 4.9%. Unfortunately, the passenger vehicle sales, they were up by 3.1%. So that on its own, it shows that we're heading the right direction. There's been a bit of a boost in terms of the economy, and also some sort of positivity that is happening with the elections now, being something of the past. The GNU is in place. Now people are starting to be hopeful again, and that's what the automotive sector needs. Now, last month as well, we saw the fuel cuts, and also this month. And those are the signs that we're heading in the right direction in terms of stimulating the economy. And this industry, more especially on the retail side of things, is very much needed.
Thembinkosi, a lot of people are holding on to their vehicles for longer because they are scared of the interest rates being high. You operate in the top end of the market. These are the high performance, top end of the pre-owned market. How has that market been doing, if you can take us through?
Yeah, no, look, I think as we've reported as NADA before, the premium segment have been down. And if you look at the Chinese brands that are coming into the country, this year alone, we're talking about 20 different models that are coming in, and I'll say 90% of those models are coming from the Chinese. So the premium segment is really under pressure. People are down buying, and they're not longer looking for most expensive vehicles. And us as a business as well, we have to kind of like realign from selling these kind of vehicles into what the market needs and the market requires. So it's been a matter of adjusting. As I've said before, this industry is a very resilient industry. We're very resilient leaders in this industry, and we understand that tough times don't last, but tough people do. And that's what we've been doing as an automotive sector. So yes, there's been a lot of adjustments. Your compact SUV and your much cheaper vehicles are entering the market. So what we've seen is that a lot of people are holding on to their vehicles, but those that really have to change their vehicles, they're down buying.
So downgrading is one other thing, but there's also the surrendering of vehicles. As some of your members have been reporting back to you, what have they seen over the past 2 years, particularly as interest rates have been at a 15-year high?
Yeah, look, I think we've seen quite a lot of vehicles being repossessed, and we've seen a lot of people, as I've said, from driving a very expensive vehicle to say, I just need mobility, and then the person will trade in a more expensive car for a cheaper vehicles, and we've seen that, and that I think that is why it is important for this sector to continue stimulating the economy in the sense of partnering with the banks to bring schemes that will assist our clients. Because remember, as much as people are buying cars for personal use, there's also business. And we need those businesses to be able to be mobile with the fleets. And that's where the banks comes in with the schemes and all of that. But definitely we've seen quite a big number of people downgrading and others letting go of their vehicles simply because they cannot afford anymore. Interest rate is high, inflation is not helping much. Cost of living is extremely high, and people's income are not increasing at the rate that the expenses are increasing at. I'm sure a lot of people out there, you don't even have to be an economist to know that you need to find that balance. And if you don't have that cash flow, if you don't have that bit of equity in your hand, there's nothing much you can do.